Hello guys, this is Trade of the Day. I'll be going over today's trade that I made on Thursday, April 13, 2017. Uh, Quickly mention that if you've been learning a lot from these videos, thank you very much for watching my videos. Highly recommend you to subscribe to the channel. I'll be posting a lot of more videos that could definitely benefit you in your trading career. And if you do enjoy them, if you do learn something, please like them. And as a reminder, this video is for learning purposes only. Alright guys, so today I'm going to go over my swing trade short on Amazon. Now Amazon, this is what I called an overextended short. Um, Definitely overextended because it ran um, 5 days in 4 days, actually 5 days in a row, and on this day actually it was running as well, so that would have been 6 days in a row, but there was a huge reversal on that. So that's when I took an opportunity to short it because it was overextended on the stochastics, Bollinger Bands, and when stocks move this fast on high volume in all these days in a row, it's natural to see a reversal on it, but you have to kind of wait for the right indication of the reversal. And for me, the right, I guess, alert or telltale that this was going to reverse was this hammer reversal. If you guys see this huge wick, it just shows that everybody sold and took their profits, and then there was a kind of gave me an indication there was a reversal coming. Um, Again, you don't want to be too early on shorting stocks that are trending up on high volume because you could get short squeeze. You want to wait for an indication. You want to wait for some sort of reversal, the backside of the move, as a lot of traders say, and that could be like handled like a reversal hammer. So that was the first clue that told me there was going to be a reversal, and that was going to be a reversal coming, and that's where I took my trade. So um, one thing I want to mention as well, that the reason why this reversal happened is overall market sentiment change. And why was that? Actually, on April 5th, there was the FOMC minute announcements. If you look at the Nasdaq, which that's where Amazon is traded on the index, there's a huge sell-off on the Nasdaq on high volume, and that's important because if the whole market is reversing, Amazon happens to be big stock, that's a high percentage component of the Nasdaq and part of the S&P, and it's also trading at high, all-time highs. It's definitely a good indication it's going to reverse as well. And also, if you look at SPY, S&P 500 on April 5th, there was a huge reversal on high volume. So those are all very, very important because keep in mind that these indexes move stocks and these stocks move indexes. So they kind of move together. So when you trade these big cap stocks, you have to look at the overall market and see what it's doing to kind of get a better view if you are doing the right thing by shorting stock or et cetera, et cetera. So I did short. Now, the funny thing about Amazon, when I shorted it, the action market closed. So um, I usually day trade the first 2 hours of the day, and sometimes I do swing trade in the mornings, submit a position in the mornings or in the afternoons, and I kind of missed the afternoon market. I actually got back from the gym, but there's the after hours, so it was nice. So when I saw this huge reversal after the FOMC meetings in the market and on Amazon, I knew this was the time to get in short on Amazon. So I did open my position around 9:08 at the market. My stop above all-time highs around 923.75, and it was a starter position. Again, this thing could hold support at some of these price levels, and it could continue to trend. So sometimes when you're shorting stocks that have been trending like this, you don't want to be full size. You want to kind of gauge to see the price action, let's see what happens, and then build your position from that. So I did short it there, and I had my target around 881 based on this short. So the next day, it was nice because there was a pullback in pre-market, but that pullback was sold off. Huge volume, sold off, sell off. So when I saw this day on April 6th, I knew this is the reversal. So I was just waiting for me to take profits. Now, There was some support area around 890 here. You look at the price, and that's where the price kind of started to support, and it bounced off. So I should have taken some profits there, but I didn't. But it was okay. I was looking to possibly add into this position at a good area, good resistance area. So if you look at the chart at 908 around this area, you look at this tops right here and this lows right here. There's some resistance area right here, and I decided to kind of add in when I started to see some weakness again. And the great thing about adding in is now that, now your risk to reward changes. Now I don't have to wait for it to hit 880. Now I have to wait to maybe 889. Actually, 889 was my target now, so that was nice. So it created this support area right here. So when it hit this again, I was gonna close my position for a profit, and that's exactly what I did. So one thing I want to keep in mind that when I added my shares here, I left the same stop, because keep in mind that this trade was successful. It did flush how I was looking for. So this kind of almost confirms that this might be the top. Now it's not guaranteed because there could be a PR news, the market could change, it could be a macroeconomic move that could make the market move. So you also got to keep that in mind. But knowing that there was a huge red volume sell-offs, that gave me an indication that hey, this thing is going to be a legitimate pullback. So I added here, and my next target to actually cover was going to be this 889 on this support level here. So now if you look at the 5-minute chart, I did close half of my position when I hit here, 89. I left the other half to see if it could break this level, and it did. But I actually ended up closing it before that because it started bouncing here, and I started seeing some support, and I was like, you know what, this thing could bounce off, create a higher low, and then just kind of reverse. And then I may have to wait a couple days, or this thing may hold this level of support. And I was like, you know what? I'm just gonna take my money. I still got the 2 to 1. I don't want to get greedy, and I want to lock in those profits. So I took them, and then it called it a day. But later on, it did ended up selling. Now this is very tough for a lot of traders to close your positions when you're up. And a lot of the times, as humans, we kind of get greedy sometimes. We want more, we want more. And the most important thing is that you're consistent in a 2 to 1. Sometimes you are going to hit those 3 to 1s, 4 to 1s on your trades. When you risk, $1,000, you make 2,000. You may risk 3,000 to make 6. Whatever the case may be, or 100 to make $200. Whatever you're trading in terms of size. But sometimes what happens is if you don't close your position at 2 to 1 at least, and it reverses, you lost the opportunity right there. So that's one thing that you want to keep in mind. But it's important to also hold and have confidence in your trade, to know and hold for it, even if these bounces happen, and let it ride, because it's important to have conviction. Overall, you want to build that conviction, that trust that what you're doing is legitimate, that you're doing the right things to kind of be a profitable trader. So I hope you guys learned from this video. Again, guys, thank you for watching these videos. If you have any questions, concerns, feel free to comment. I'll be posting a lot more videos. If you enjoyed it, if you learned something, press like, and you guys will hear from me soon. Thank you very much.